An invest is at it again, and this time they've spilled the beans on what the future of EVs and the industry could look like at this point. Any car company that isn't Tesla has got to watch out overlaps, really well with areas in the US, where we have that very interested truck buyers today. So I think some people think this would be a niche vehicle platform. I don't think so, if I was Ford, who's they're already cutting the production shift at the F-150 Lightning plant in Detroit. I'd see more trouble coming for on the head as the Cybertruck rolls out. Yeah, well, you all did a great job of covering the highlights, so let's talk about the details. Tesla said that it doubled its AI training compute. Why does that matter? Because Tesla has this immense data advantage over peers when it comes to solving for robotaxis, because it's using its customer cars to gather information. So now we think that Tesla's getting over 2 million miles in FSD, its full self-driving software per day. Compare that to robotaxi peers. That's like half of what Chrome GM's effort has gotten in its entire lifetime. Tesla is no ordinary car company. It's a leader in electric vehicles, autonomous driving, and renewable energy, and much more. But what makes this company so successful? And what can we expect from them in the coming years? In this video, we're going to answer some of those questions and more. We're also going to explore the factors that make Tesla stand out from the competition, the challenges it will face in the market, and the innovations it will bring to the world, from the game-changing Model 3 to the futuristic Roadster to the daring SpaceX missions. Tesla is not just a car company, but it's a pioneer of progress. So what does AR Invest have to say about Tesla? Let's find out. What we're focused on is the long term. So I'm really excited to hear about their progress towards a future robotaxi platform. Again, I think it'll be much more profitable than the electric vehicle business, and it'll totally change the business model. So I'm looking forward to hearing more about that. I'm puzzled by that idea, because if there's robotaxis, I don't need to buy a car, right? And so I'm not sure how profitable that how are you modeling that, and how soon do you need for it to arrive for it to make sense the way you're modeling it? Yeah. So you may not need to buy a car. Basically, we think incremental car buyers might forego that decision, especially if you're located in an urban area. But it'll be a fleet model. So Tesla already has this a partnership and integration with hers. They talked a little about that in the letter. Some of the app integration that they're doing this quarter. But I think in the future you could imagine that hers could be a potential company that maybe houses and maintains these vehicles for customers. Ultimately, that the reason that we think robotaxis are so exciting is because ultimately they'll be priced. They could be priced below current ride-hail prices. That'll expand the market for ride-hail as we know it today. And we think this could be very profitable. So our estimate for our 2027 price target, which is published, is that we think gross margins could be around 50%. So that's north of that the around 20% that we're seeing today, of course. And that's really driven by the autonomy business. We think this will be a services business model where they're charged per mile, and they'll get very attractive margins on that business. Tasha Keeney is an analyst at AR Investment Management, one of the biggest Tesla bulls on Wall Street. The analyst has been following Tesla closely and made several comments about the company's potential and prospects in the past few months. In this video, Tasaki reiterates AR Invest and how they stand on Tesla, and further highlights why legacy automakers need to tread with caution, else they lose their market share on Tesla. But could she be right? Let's find out if Tesla continues to dominate the EV market. Hey everyone, welcome back to Tesla in October 2023. In an article titled "Why Tesla's Potential Remains Promising," Tasha Curie defended the company's performance and outlook in the face of dismal Q3 data and Elon Musk's cautious tone on recent investor calls. According to Tasaki, Tesla is still years ahead of its rivals, and the Cybertruck, which is set to make its commercial debut on November 30 of this year, will revolutionize the EV market. The Tesla bull also mentioned that Tesla can overcome the manufacturing difficulties that the Cybertruck presents, since it has extensive expertise with challenging volume production ramps. May face the Cyber vehicles have a design that is intended to upend the pickup truck industry. With its amazing towing capabilities and roomy interior, this electric powerhouse is poised to redefine performance and utility norms. It is anticipated that Tesla's foray into the pickup truck market will spark a movement in the Cybertruck industry toward electrification, and it may inspire other automakers to expedite their plans for electric vehicles. In addition to thrilling auto enthusiasts, the impending release of this truck may have a significant effect on Tesla's stock performance. A successful launch and positive market reception may boost investor confidence. However, before we continue, if you enjoy this kind of content, please hit the like button, subscribe, and enable post notifications to stay informed about all that is happening with Tesla. Our Invest's bet on Tesla is not limited to the Cybertruck in 2023. In a September CNBC appearance, Tash Keeney stated that autonomous taxis were a potential market for Tesla. The expert clarified that Tesla has a distinct edge in autonomous driving due to its sizable fleets of cars that all gather data and help the company's software. Additionally, she pointed out that there are preliminary indications that autonomous driving is already safer than human driving, and that, should Tesla introduce a robotaxi service, in addition to the EVs Cybertruck and Robotaxis, the company may take a sizable chunk of the global automobility industry. Additionally, Tesla is branching out into other bus industries that enhance its primary automotive company and provide additional money. It has branched out into the energy industry, offering customers solar roofs, power packs, power walls, and other items that let them produce, store, and use renewable energy for their residences or places of business. Additionally, Tesla intends to introduce new services like the Tesla Network, which will let users share or utilize their cars as self-driving taxis. Long-term, these ventures strengthen Tesla's value proposition and forge connections with its automated business. However, in the short term, these ventures will raise Tesla's valuation and, consequently, its stock price. In August, Keeney made remarks regarding Tesla's stock sale, claiming that it was set up to benefit ordinary investors. In July, Tasha Keeney tweeted about Tesla's expected share value in 2027 and provided 3 price targets based on various scenarios. The ARK Invest analyst also noted that Tesla has taken a really interesting approach in making its stock amenable to its retail base, and it shows that there is company values when it comes to loyalty with its customers and fans. She also noted that the stock sale was a smart move to raise capital and reduce debt without diluting shareholders too much. She states that the base is set at $2,000 and that the benchmark target is $1,400. In the event that Tesla surpasses expectations, the bull case is expected to be approximately $4,000 based on numerous assumptions, such as operational expenses and gross margins from vehicle sales. Investing in capital driver autonomy, according to recent news, Tesla plans to begin expanding its factory in Gunhide in the first half of 2024. Representatives of the electric vehicle manufacturer have been absent from a public debate regarding the expansion plans, and the company has revenue valuation multiples in place. When factory tray is ready to be updated, a water recycling plant will be constructed. In the upcoming years, plans are also underway to build a second production hall and a battery recycling factory, among other things. According to Brandenburg's Environment Ministry, Tesla intends to increase production capacity in Gunhide from 500,000 units to 1 million cars annually. The automaker also plans to increase production capacity in battery storage from the current 50 watt-hours per year to 100 watt-hours per year in the future. Tesla has increased its production scale and efficiency, allowing it to reduce costs and boost profits. It has made significant investments in constructing its own battery plants, such as the Gigafactories in Nevada, where it collaborates with Panasonic to make its own battery cells. Additionally, Tesla uses vertical integration to manage the majority of its supply chain, from design to delivery. This enables the automaker to produce, lessen its reliance on outside suppliers, streamline its operations, and increase the quality and speed of its output. With production costs reduced, Tesla may drop the price of its own cars and lower the pricing of existing automobiles, making them more affordable. Tesla's production efficiency and scale do assist it to achieve economies of scale and lower its battery costs, which are the key components of EV expenses. What are your thoughts on Tasha's most recent remarks regarding Tesla? Please share them with us in the comments section below. Also, watch the next video to get more thrilling updates on Tesla. We hope to see you there.